We've got a great guest, my friend Jim Bowman. Jim, how are you?
I'm doing fantastic, Nate. Yourself?
Great, great. So thanks for coming aboard. We appreciate you coming on here.
My pleasure, and honored to be here. So let's go help some people.
Sounds great. Sounds great. Ready to rescue some retirements then.
Yes.
Awesome. So Jim, I wanted to bring you on here to talk about, I guess, some concepts and a specific product even that has been, I want to say kicking butt, especially when, the type of rate environment that we find ourselves in here. And before we get too deep into the makeup of this as a cash alternative or a place to put money. So this particular, I guess, concept and even product that we're going to be talking about, I think plays a piece of that retirement plan, a very important piece of that retirement plan, potentially for a lot of people. I want to go into a little bit of background of why this product was even developed and the process of how it got developed as well, if you want to kind of touch on that for a little bit.
Sure. Well, working with people like yourselves and working with people's retirement dollars, one thing became very evident, and that is a lot of people are sitting in cash. And they're sitting in cash for multiple reasons. One is maybe they don't want to lose money, so they don't want to put it at risk. Another, they don't want to tie it up into a vehicle that may have surrender charges. So, and another, I just might need it someday. I'm probably going to go to the kids, but I might need it someday. So we, especially, in the past year, we've never seen more clients sitting in cash positions than in the past. So that's great. It gives peace of mind. But what we are trying to do is, how can we provide a product that can bring real value to the client, yet still have liquidity to them when they need it? And that's really the genesis of this product that we built with United Life called Legacy Accel.
Perfect. And so how did it get built? There were a few companies, I think, involved, and really, as far as all the advisors, you guys have one of the biggest and best networks of advisors. So kind of figuring out what they were wanting to see from all of their clients and just being able to craft a product that really fits, checks all the boxes, really.
Well, and you remember from your days here and now as a successful advisor, talking about the needs of the client. What are those needs, and how do we balance those needs with what an insurance company needs to do to offer product? Because they have to be profitable, because we are making long-term promises. You are making commitments, Nate, to your clients that you are going to provide for their retirement, and you need tools to do that. So when we talk to our advisors, actually clients as well, it's like, what are the things that are most important? And in this case, when it came to cash, it was true liquidity. Liquidity is number one. I've got to have access to it. Now, it doesn't have to be ATM liquidity. I don't need it tomorrow. But if I need, $50,000 and I've got 200,000 here, or I need all 200,000, I need it with no penalties. So we designed a product that the insurance company could be comfortable with, and the client can get the value of more than just money sitting in a CD making 0.003, that then you get a 1099 miss at the end of the year on the little interest that you paid, that only upsets the client even more at how little they paid, and now I got to pay taxes on it. So we wanted to avoid all that. And so that's how we started talking to numerous insurance companies, reinsurance companies. We have a product design company that really led and quarterbacked those discussions. And we came out with this product that really it's 100% liquid to the client. It actually has a meaningful guarantee of 2.5% that the client can expect. Mm-hmm. Now, there are charges for that. And that charge is the cost of insurance and the fees associated with that. For someone in their late 60s, 70s, that might be 1.5, 1.75. So you would still, just on cash net out 75 basis points, which is more than double what you're getting at the bank. Mm-hmm. So cash on cash alone, it's a good deal. The best part of it is the other value you get with it. And the other value is you get a legacy play. You get actual life insurance, because this, ladies and gentlemen, this is a life insurance product. Okay, so let's make no mistake, but it's because it's a life insurance product that the Internal Revenue Code allows us to give you a tax deferral on the growth. It gives you a tax-free death benefit that's going to be more than what you put into the product. God forbid you pass away. And also off of that death benefit will give you a chronic illness rider, which can offset some long-term medical expenses if you cannot do 2 of 6 of the activities of daily living. So we wanted to take a product that was a cash that's really what I like to call unemployed capital. Cash is unemployed right now because you're not making anything. How
it's not working for you, right?
It's sitting on the couch eating potatoes, doing nothing for you, right? So what can we do to bring real value to your clients? And so we feel this is a real good value to the clients. And, depending on what the client's goals are, will depend on how much they should or would want to put into a product like this.
Yeah. So you touched on a few things. Let me summarize that real quick, if I could. You mentioned it's got the liquidity, maybe not, ATM type liquidity, but there's no penalties to access it. So maybe it'll take, a few days to get to you instead, but there's still no penalties.
Correct.
You mentioned a death benefit, chronic illness, if some kind of long-term care issue comes up, and then the minimum guarantees after the cost of insurance, but it also has some type of upside potential too with it as well, doesn't it?
Correct. So it's tied to an index that has a terrific historical view of it, a little over 8%. And depending on what that index does every year is going to get credit to the account. So if you get, 5%, let's say, you will get the less your cost of insurance. And then that example I used earlier, let's say it was 1.5. You would then net out 3.5 on that money, which, 3.5, years ago didn't sound like much. In today's environment, man, that's pretty darn good on cash. Now let's take the worst case scenario, because I think more people want to, look at that. Let's say that index credit for 3 years in a row is negative. You are not going to go negative. You will have that 2.5 guaranteed when you exit the contract. So let's say in 3 years, you put 100,000 in, it doesn't do anything. You've got your cost of insurance that you paid. When you exit that contract, the insurance company is going to true up or make good on that 2.5% less your cost of insurance. So that's a real positive. So you get that meaningful potential upside, but you've got that floor of safety net. So we really look at this as you're going to be ahead of the game if it's just sitting in cash in your mattress or in a bank account, CD, or money market.
Want more confidence in your retirement? Our contact information, our calendar link is going to be in the description. So don't forget to smash the subscribe button, hit that notification bell so that you can be notified every single week when we get new content going on. We also have another YouTube channel for our podcast called Retirement Rescue Radio, where we also dive into a lot of topics very deeply. We do that long format, sometimes half an hour to an hour is what some of these can be. And so once again, guys, appreciate you sticking around here. Join us next week, same time, for some more content to give you the information that you need to empower you to live the retirement that you deserve. Take care.